Most traders draw trend lines wrong and it's costing them money. In this video, I will show you the right way to use trend lines to spot profitable trades and trade like a pro. Welcome back to the channel. I'm Godson and here we'll break down trading strategies step by step so you can trade smarter, not harder. If you are serious about improving your skill, you're in the right place. Before we dive in, hit that subscribe button, turn on the post notification so you don't miss future trading tutorials. And if you find this helpful, drop a comment below. I would love to hear your biggest challenge, trendline trading. Alright, let's jump straight into the chart and master trendline trading together. So for the first example, we'll be working with, I'll be using gold on the 1 hour time frame to actually explain the best way to actually use your trend line in actually staying profitable in the market. So here we are on gold 1 hour time frame, and as we earlier know, or as we are being taught, for some persons that do trade with trend line, this is what we're going to mark here. And I'm going to align all of the wrongs, do's and don'ts, and the best way to actually use this. So at this point we have our trend line at this point, and if you should pull it this way, this is the second and third touch here. Okay, so from the trend line strategy, there is a concept that after having this first touch, the second touch, if market returns back to this point, you should be expecting a third touch. But today I'm going to explain something different, a secret that you can use as an edge to actually stay profitable trading trend line. Alright, so having this trend line at this point, let's call this our liquidity. Okay, so this is our liquidity. So now why am I calling it our liquidity? You can see we have descending lows. And when you have descending lows, there is no point trying to expect this market to come back and give you a good bounce to the upside. Instead, what you should be looking at for is market taking out the liquidity below the trend line, because what you have here is trend line liquidity and not trend line. So instead of you looking for a possible buy at this point, you should be looking for the price to actually break below, take out the liquidity before you look out for a buy. So I'm going to explain the best way to actually trade this trend line at this point. So let's take this off. Okay, so we've taken that off. So if you come right into this point, I have this low here. This is the low we have. And at this point here, market broke above this high, giving us a break of structure. So we have our break of structure here. So instead of waiting for the trend line that was here crossing to this point, this is what we are going to do differently. So we have our push to the upside, we have this fair value gap, and we have this other block that actually caused that break of structure to the upside. So this is what we want to see. Market come back into this zone, then expansion to the upside. So the right way to actually go about this is instead of doing this, which price went up, came back down, we have to go through this way. So we'll place our buy on this other block. A stop loss below this wick, because this is the last protected low, and we target this high. This is what we're supposed to target, possibly this high, or we'll go for maybe a 1:2. A 1:2, because if you've been following this channel properly, you should know that I don't target this extreme high. I don't target this extreme high. I always consider the extreme high as a liquidity point, and price should possibly reverse from this other block, whether to the downside or to the upside. So I always like to target before that high. So if I was going to before this high, then this should have possibly be a 1:2 trade. Now I'm going to show you the next example to actually what to still profitable trading, still use understanding trend line and actually what using it to stay profitable in the market. So let's take this off. Okay, so we have this low. After this price push to the upside, this price gave us another what reason to look out for a trend line. Look at this point. This is what you have. So let's get to label this as our trend line. But in this part, I'll be considering it as my liquidity. So let's get to mark this chart properly. So if you look at this point, this was where we had the last break of structure to the upside, to the downside, sorry. And we have this high. This was the what high that caused this push to the downside. So at this point here, you have a change of character. So we have a change of character at this level. Don't forget, this low is protected. So whatever you have here is what internal price action. This is a new high at this point. So at this point here, if price should break above this, this is our what break of structure. This is our break of structure at that level. Don't forget we have this trend line at this point. And what was your expectation? You want to what see price come to this level, give you maybe a third touch at this point. Maybe your stop loss below this level. And you want to see price extend all the way to maybe probably this high or this level. And what did you see? We're taking out. We're taking out. Now, understanding that this line is what a liquidity line. This is a trend line liquidity. So we shouldn't be expecting price to reverse from a trend line liquidity. Instead, we should be expecting price to actually what break a trend line liquidity. Following the fact that what you've already seen this touch, the second one, this was the first one, the second one, and the third one you want to see price what respect. Instead, price came below to actually what sweep the liquidity below this point. I don't know if that makes sense to you. So price actually what took out the liquidity below this point, and that is one thing I want you to actually what always apply in your chart or in your trading. Understanding that this line is a trend line liquidity, not where you should be expecting market to bounce off from. So now what happened? Let's get to look at a better way we will have done this to have a profitable setup. So understanding that what you have here is what a liquidity trend line. So this is what to do. So this is the best thing to do at this case. So if you look at this price to the downside, look at this level here. This was where we had the last break of structure to the downside at that level, followed by this low. Having this low here, that was what a liquidity sweep. A liquidity sweep. And after having a liquidity sweep, what can we see on the chart? What can we see on the chart? This was the last high at this point. So what we want to actually what see at this part is we want to see market either what sweep this liquidity before continuing to the upside, or price should give us a valid reason for us to sell. I don't know if that makes sense. Now look at this level here. At this level we have a change of character. This was a change of character, and this was a break of structure, and at this point you have a sweep. Now having this change of character and market has come to take out this liquidity, this market gives us a supply at the top. Look at this supply first. We have this supply sitting here. Now let's go back to the market actually sweeping this low. Now market swept this low, and after sweeping this low, you can see price gave us a change of character at this level here. So we had a change of character at that point. After having this change of character, we already see that what we have this liquidity at this top, this relative equal what equal highs. That's what our liquidity. I'm coming. So now after we had a sweep at this level, you can see that price gave us this other block. Price gave us this other block, and you can see the nice push to the upside. We can see we have this liquidity below. at this point. Price gave us this liquidity. So if you should pull this to this side, placing we already know that what at this point we have this supply we want to sell from. We already have that supply we want to sell from. This tells us that whatever trade we are taking from this other block, we should be able to close it at this supply. That's what I was explaining in this case here. So if we should place our buy order at this point, we should place this here. Let's adjust this properly. And our stop loss below, our take profit should be at this supply zone. This is what I want to see our take profit. So if you look at this trade, this was a 1:2 plus take profit hit, and price has tapped into this supply because already we are on a downtrend. We had a change of character, break of structure, sweep here. So that is why you are seeing this price reacting to this supply. So you can actually understand that instead of you actually marking this as trend line, wait for market to always take out that trend line, give you a confirmation using the order block to actually trade that particular zone. I believe you're actually following, and if you're actually following, please do to leave a comment in the comment section. Let me actually understand that you're actually following this class. And if you've been having issues with trading trend line, please do to also leave it in the comment section. I will also attend to you. Let's go to the last example now. So this is the second example we'll be looking at, still using trend line to actually look at this trade and what we'll have done better using trend line. Okay, so looking at this price action from this level, because we'll be looking at this level to this high. So at this level here, at this low, at this point, let's get to mark the price action. So if you should place your trend line from this point all the way to this level, or let's get to look at this way. If you should place your trend line this way, okay, so if you look at this level, we have 1, 2, 3, 4, and we're expecting maybe this price coming back to this point, and price you're expecting this zone. Now let's come to label this chart. So here, instead of putting it as our trend line, we already marked it as our liquidity. Get this. So this is our liquidity. Now let's get to mark this using our order block. So you get to actually understand how we use trend line in our favor instead of trading trend line as our market coming back to touch it and we expect a buy or a sell. We'll use it as our liquidity confluences to actually aid our order blocks trading. Okay, so right on this chart, we have this level here. So this was where we had the last sweep of liquidity. So we have a change of character at that level. So this was our change of character. We have our break of structure to the upside. Have this break structure. And we have this break of structure to the upside. Now, let me get to explain something. So when this price was actually moving to the upside, we noticed something. You can see that we have this other block that was left unfilled. So we have that other block at this low, this other block here, and we can see there was a fair value gap also left behind. So this was our fair value gap. Okay, so having this fair value gap and having all of this trend line liquidity here, this tells us that we should be expecting price to break this line and sell to the downside. Instead of expecting price to come back to this trend line and expect a push to the upside, instead of expecting this price to come back here and pull up to the upside, we should be expecting this to fail, because price has been testing this line for first, second, third, fourth. So if price should come back to this trend line, we shouldn't be looking out for what? A buy. We should be looking for price to actually break it, because we have liquidity resting below this point. So if you should pull this to the right hand side, so we've already seen that what we have this other block and we have this fair value gap, and we understood that this level is our trend line liquidity. We're not expecting a buy. Liquidity. So once price comes back to this other block, we want to take a buy from this level. Now, let me get to explain something. If on price returning back to this point, do you want to sell at these levels, or do you want to sell at this level? That's the next thing to look at for. At this point, we have this here. You can see we have these descending lows. And instead of you looking out for what? Sell to the downside. Seeing this, you should understand that this is what trendline liquidity. I don't know if this is making a point to you. So having this trendline liquidity, where should be our first take profit? Our first take profit should be at this level. This is what we want to see. We want to see price get to this point first, because we already know that there is a trendline liquidity above this point. So if price should return back to this point, we want to maybe take up have a take profit at this point. Then possibly the next take profit should be at this supply level here. Now, why am I marking this as a supply level? We have liquidity pool at this point, this trendline liquidity, and we have a fair value gap. So whatever we are doing, we should be able to at least exit the market at this level here. So let's get to place our buy and see what we'll have actually achieved trading from this point. So this is the first level here. So we have this first level at this point, working with 29 pips as our stop loss. And if we were to go with this will have given us a 1:3.3 clean trade. And if you are to go for the extreme zone, which is this level here, this will have given us a 1:4.8. So now you can actually understand how we are able to use trend line in our favor in achieving profitability in the market. Okay, so that's how you can actually master trend line trading and start trading with confidence like a pro. If you found this helpful, make sure to hit the like button, leave a comment with your biggest trading challenge, and don't forget, subscribe to the channel so you don't miss out on any amazing educational video that will be dropped. Thank you for watching, and as always, trade smart, trade confident. See you in the next videos.